Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, March 23rd. Okay, it's 7:30 as I'm starting the video. I am running about an hour late, and since I don't have anything else handy, I'm going to blame it on my COVID shot yesterday. Just as a matter of reference for those of you that may be curious, uh, the shot itself was no trouble at all. It didn't hurt. It was fine. Really didn't have any side effects to speak of. This was the first test for me, or excuse me, the first shot of the two-shot sequence. I had the Moderna vaccine, and the only thing I would say is I had soreness at the injection site later in the day and into the early evening. So what I would say to you is, if you sleep on one side or your other, get the injection on the off side. So if you sleep on your right side, get the injection in your left arm, because you won't find that comfortable, rolling around on that injection side. At least I didn't. It was a little uncomfortable and blah, blah, blah. So anyhow, that's my coaching for the COVID shot. So I go back April 19th, and then we'll see where it goes from there. But pretty easy overall. Taking a quick look at markets, ES is down 0.3%, NQ is flat. Small caps, however, are down 1.2%. Looking at the calendar today, Treasury Secretary Yellen and Jay Powell will be providing some testimony this afternoon. And also, if you go to any of the, the Econ Day macro calendars, you'll see there's a lot of Fed speak this week. I think Jay Powell is speaking 3 times, with some other governors speaking as well. Those are always good things to just at least keep in the background, that, these guys are talking. I don't think it's anything to trade around, but kind of nice to know what's going on and who's doing what. So let's look at the indexes. Then we'll look at the FATMAAN names, and then I want to look at financials and a couple of other charts to wrap it up this morning. SPY 2-hour chart. We had the tag of this lower gap, and we got the nice bounce off that. We recaptured that 390.50/391 zone yesterday. That would have been an area for a technical buy on the 2-hour chart, and then you got to push up towards the close, and then it backed off. But as it stands now, prices squarely in this no man's land between resistance and support. What the bulls want to see is the recapture of this breakdown candle. Whenever you've got, a big, red bar in the chart, that becomes a resistance level, and one that you want price to recapture that level. That will be a natural resistance point up towards 395, which is, near the all-time highs. But in order to make an all-time high and to move forward, we're going to have to, take out that breakdown candle high at some point. The good news on the indicators is that we are getting that classic PPO reset at the 0 line, and that can be a powerful signal if we get the confirmation of the PPO crossover right near the 0 line, and of course have RSI confirm it with a continued break higher above 50. Those would be good things for the bulls on the SPY 2-hour chart. If we drill down on the 30-minute chart, I've sketched in a little channel here. I'm not sure if it's dramatically important, but it does capture the recent price action. We opened up down here yesterday and quickly made a move higher. There were several buy points along the way that we discussed yesterday morning. If you were, on top of that, the nice thing about yesterday is it was primarily a unidirectional move with not a lot of whipsaws. So once you got on board, at any point along the way, whether it was down here at towards 390 or if you bought at 392, you had a nice little trade. And then right at resistance at the close of the day, it backed off and pulled into 392. So, for this morning, I think as long as it can hold 392, bulls are fine. If it were to drop out of this channel down below, you're going to get a pullback. Whether it comes all the way back to 390, I don't know. But you may see some support in this 391 area that I don't have marked, but I can see that there's a little support area there at 391. All the action yesterday was in the Qs. We talked about the falling bond yields lifting TLT. I actually looked this morning in the pre-market and TLT is higher again, so that means falling rates. So that means that headwind of higher yields should not be there today. There was some nice technical buy points yesterday morning that we talked about 316 and we talked about 318. So on the gap up, once you took out 316, that was your technical buy level, recapturing that level from below. And then you got two big pushes up through 318, which would have been a secondary buy location, and then ran into trouble at 320.50 and pulled back to 318. So today, I think 318 is your pivot. Above is okay for bulls. Below is, bears may have that slight edge. And remember that yesterday we created this gap here between, let's call it 313 and 315 and change. That'll eventually get repaired. But if we come back here on that first tag, I usually expect a bounce. And if not, then you got to get short for the gap fill. And here we are on the 30-minute chart. Here's the gap we just discussed. Here was the recapture of 316 that we just talked about. That was a technical buy. And then we had this gap at between 318 and 321.90. That was your second place to buy. If you were either missed it or hesitant here. I think once you enter a gap, especially a sizable gap, one that's $3 or $4 wide, it pays to, get long and see what happens. And in this case, you didn't get a full gap fill, but you got up here to 320.50 where it ran into trouble. And you can see this on the chart that quite a number of candles could not get through, and that was a good place to call it a day if you were long, given the fact that you had 5 or 6 30-minute candles that made no progress. And even if you were bold or wanted to take a shot, you could have gotten short against the high, that level where no progress could be made. There were no incremental buyers. And then you got a little move down into the close. So today, I think 318 remains your pivot. You can be long against the bottom of this gap and then look for a complete gap fill at some point, today or tomorrow. But you got to hold 318. If you lose 318, then you're back in the weeds with this open gap, etc. IWM has been really, really weak. You can see that it's in this down cycle. PPO has crossed below the zero line and has not shown any inkling of wanting to turn up and get bullish again. Same thing with RSI. It dropped down below 50, so now it's back in the bearish regime. For today, I mean, we're down 1.2% in the pre-market, so even though I've got this here as the pivot at 226, we're going to open a lot closer down to 223. And from that standpoint, if you lose these prior lows, that would be a sell signal. And my first target would be the top of this gap. And then my second target would be a gap fill. Now, if you've been in cyclicals and value, and I've got several names that are hurting, you're probably hurting too. One thing you can do is use your IWM as a hedge against your long cyclical and value names if you want to hold them. So, you can have your short in here and make some money on the downside, intraday or in your active trading, and then apply that to any losses you might incur on your swing trading positions that are in that sector. Let's look at the 30-minute chart. I've put in this broadening wedge here. Again, I don't think it's dramatically significant, but usually what you see with a broadening formation is expanding volatility, and you can see that that's kind of happening as we churn through. Here's that level at 224.50. Hold that. You don't want to see 223 go, which was these prior lows, and then we just talked about the gaps below. Certainly don't want to see price get into the weeds way down here. That would just make it that much tougher to turn it around and would entrench this downtrend even further. Now as we move into FATMAAN names, if you like the analysis and you're new to the channel, I really appreciate you spending some time with me. I work really hard to identify the key levels that will make your active trading a lot easier. If you focus on your execution around those levels, I really think your trading will improve, and I encourage you to do that. Hit the subscribe bell or hit the subscribe button and the alarm bell. You'll get all this content sent to you as soon as it's published. Also, over in the show notes are places, links to the blog and how to register for my content, where you'll not only get an invite to our trading room, you'll get everything I publish in a nice, neat email sent directly to you, and you won't miss a beat. For those of you that have been with me a while, I really appreciate your continued support. Hit the like button, pass a link along to somebody in your trading circle that it may benefit. I'd really appreciate that. I'm trying to get somewhat more aggressive in my reach out to new people, and any support that you can give me along the way, I would certainly appreciate. So Facebook has been the star on FATMAAN. I've pulled back out to the daily chart, following up on yesterday's discussion. We've been in this trading range, $30 trading range for a long, long time. Now we've broken out. We've made a run up here to 293.50. We took a big look above yesterday, but then pulled back by the close. So 293.50 on the daily chart is your pivot. Above, we can look for the low 300s. And remember, our measured move target is up towards 310. $30 trading range added on to 280 gives us a measured move of 310. Facebook has been doing really, really well. Strong PPO profile, strong RSI profile. So kudos to anybody, anywhere along the way, whether it was down towards the bottom of the box here at the 200 or 260, anywhere along the way. And there were opportunities to get long and stay long the name, even if it was on a day-to-day basis if you're active trading. So Facebook has been really, really strong. Apple had a nice day. We talked about 120.50 as an important pivot point. It was able to come up and take out downtrend resistance of this channel, and it was also able to pop above 123 into this gap. So today, as long as it holds the gap at 123, bulls are good to go and can look forward to a gap fill up to 125. If it were to pop above that, then we've got this prior sticking point at 127. You can see 127 resistance here. Here we had a prairie dog pop up, retreat, little false breakout, and that resulted in a dramatic move. Anytime you have a false breakout, then return to a trading area, the technical target becomes the bottom of the prior range, and you got that big move here. Also here was a place where price thought about it a good while at 127. So 127 is an important place on the chart for Apple. If it can break above, then I would say trend change complete and an upcycle would be ensuing. But as long as it stays below, I characterize it as, soggy. Tesla had an interesting day. Kathy Wood tossed her $3,000 price target out there. Of course, everybody buying pre-market. Made a run right up to our resistance level at 700. We've got this band here, 700, 705. Tough to really nail it down to, a specific dollar figure on a $700 stock. But it did fill the gap, and as soon as it filled the gap here at 700, we had more or less a liquidation breakdown, bringing it right back to the pivot point. And so what I want you to take note of is where price keeps finding itself. On the high side, obviously this band between 700 and 710 seems to be a problem. Problem here, problem here, problem all in here, problem here, problem here. And then on the downside or the support side, resistance here, support, 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 and then support again at 670. So I think 670 is your number. The downside last stop level for me is around 650. We do have this spike low down to 620 where we have this support band right there. Anything below 620, then you're down in the weeds with this gap that I haven't extended, but it goes from like 600 to 570 or 560. So, no way to know which way it's going to break. That's why they call it a consolidation area. If it breaks below, that opens up downside. If it can take out this 705, 710 level, then it's got an open path up towards 780, 800, and possibly even back up to the highs. Microsoft had some really nice, sweet long entries yesterday, and and to be honest, we had them nailed. We talked about the open down here at 230. We had a reach back candle. No big gap up, and that makes it easier to trade when you don't have that big gap that you're worried about off the open. Had a reach back to the prior low at 230. Awesome place to get long. What was your second opportunity? Reclaim of 232 from below. So you missed this one, then you can buy here at 232. Next level, 233, reclaim. Next level, into the gap at 234, all the way to 237, complete gap fill. That's the place where you say, okay, all my technical targets are hit. Logical place to call it a day. So if you bought anywhere, and these are all objective levels, we're not talking about, throwing darts on a moving train and just trying to, jump on at any point. These were all technical levels, objective levels. Test the prior low, get long with a stop just below, recapture, gap entry, gap fill. That's a beautiful day of technical trading, and I hope you got part of that. Amazon, I think the free 50 club delivered. I think we opened down here around 30.50. Never went any lower. That's been a level for us going way back, and we got to push up to 31.20 near this gap. Didn't get a complete gap fill. So today we remain kind of tethered to 3,100. I mean, we can get maybe $50 to $80 above, and then $50 to $80 below, but we haven't been able to truly break free from 3,100 in a long time. You can see it goes all the way back here to February. So we're almost 6 weeks into 3,100 being this pivot point, and toggling between 30.50 and 31.50. Google, I zoomed out on Google to show you the daily. Here was the gap up on earnings, and here was where we thought Google was going to the moon, and now it has spent a long time in this consolidation range between 2,000 and 2,100, and a break from that level is going to largely decide, which way it's going to go. We've got a big gap to fill down here to 1925. We've got a measured move target of 2,200 on a breakout. So right now, from a swing trading basis, you can get long against 2,000 and just see where it goes with a stop just below. You've got the 50 EMA coming in here that could possibly be support. So you're at a pretty objective level here for an objective long if you want to take a shot at Google. And really what you want to see is the PPO curl up and get ready to go. Maybe a little early yet. We may want to come down and test this 50 EMA, which would be another objective spot to try along against the 50. But certainly treading a lot of water here over the last month. Netflix, good day. Opened up here at 512, had a reach back to 510, and I've taken it out, but there was a prior gap in that area, and if you had bought against the top of that gap at 510, you had a beautiful entry and you got a great push. Even if you didn't, this takeout of 517.50, which was a prior level, was a technical buy as well. So today, there's the potential for a pullback to 517, which would be almost a half back, just eyeballing it, a half back long. I wouldn't hesitate in trying along there with a stop just below, or if price recaptures 525, I think that would be a technical buy as well with the stop just below, and see if you can get a push up to 535 if the Qs remain strong. Okay, let's look at a few charts quickly. I sent this out yesterday, but the setup is still valid. This is SMH, the ETF for semis. Has a well-defined resistance level at 242.50. I've got an alarm set there to get long. I think if price can take that out, you're going to see a quick move up to 250 at this prior resistance level. On the downside, certainly room to come back into 234 and possibly even back down to the bottom of the trading range towards 230. I don't want to play the short side on this. I don't think it's a great setup with yields falling. I think right now I'd rather wait for the long side to develop. But I will point out, notice the bearish divergence. I don't have it drawn in, but at these highs, PPO was here, and at this high, same level, PPO was lower. Same thing on RSI. At this peak, RSI was up here, but now on this peak, it's lower. So that's your bearish divergence. And you did get a pretty sizable pullback into the close yesterday. So I want to watch that carefully, and I've got my alarm set. This PWFL, we said yesterday, looked suspiciously like a double top. Same setup, bearish divergence RSI, bearish divergence PPO, double top, backed away. I think it was down 5 or 6% yesterday, and now it's sitting on its 50 EMA. You don't want to see that break much below if you're a bull, but if you had gotten short up here, a break below the 50, then that opens up possibilities towards 750 and possibly even a test of the 200 at $7. Last week on Friday, we talked about a technical sell signal being triggered on XLF on the break of this uptrend line. We pointed out the PPO rollover here, and we talked about the trendline violation on RSI. That ended up playing out today with XLF being one of the worst performers. I would expect it to be down today since I see TLT being up, and you can see prices sitting on this 20 EMA, and really below that, I think you're going to come down in here to the 50 where you've got a prior high right in here. I don't have it drawn in, but I think you've got a good chance of having XLF pull back into the 50, which may end up being a place to re-enter long with a stop just below if yields stabilize and start to move back up. And let's lastly wrap up with KRE that has been on a moonship ride. Got a rising wedge, if you will, penciled in. We are sitting on the 20 here. If you got a break below this wedge and an impulsive break below the 20, you've got the 50 down here at 62. But then if things start to fall apart, you've got a level here at around 58 at this prior high. And then you have the 200 coming in at 52. And let me just do it here just to illustrate how you would do it for you aspiring chartists. Let me pick a color. So dropping in the fib retracements off of the swing low to swing high, a simple 38% pullback brings price back into 58. A halfback long entry would be down in here. That halfback is 52.85, but given we've got lateral support at 52 and we've got the 200 coming in, that's a nice confluence of support between lateral technical support. We've got the 200 EMA and we've got the 50% halfback. You know, if you were out, I would be stalking this for a long, and I would really, that would be a compelling long if you got a 50% halfback into the 52, 53 area. I would jump on that because I think yields are going to be going higher. This is extended, has been extended. Get that pullback, hit it down here, and then look for a reacceleration to the highs. Okay, just a few trade ideas there. I hope you found the information helpful. I'll get this rendered as quick as I can and get out, and apologies for the late start. I know you guys like to look at this stuff and mark up your charts and be ready for the morning. I will get back on track tomorrow morning with an ultra early video to get back on schedule. Have a good trading day today. Hope you do well, and talk to you next time.